The ISM Manufacturing PMI came in at 55.6, highest in the last 4 years. This is signaling a lot of strength from the manufacturing economy. On top of that, Brent Crude has been dropping and could not go above the 50% level. US has stepped in and is looking to buy Japanese yen. Why is that important? We will talk about the yen carry trade, how this affects the 10-year bond yields, price action on the S&P and the Russell breaking out very strongly, and then a chart that not a lot of people are covering regarding altcoins and their strength tied to Clarity Act this week, and then how Bitcoin is in a similar structure with possible moves to the downside before we could look at going up. All of this and much more in this week's video. So tune in. Hello everyone and welcome to Strategic Markets, your place for technical and fundamental analysis all at once across many markets. Now, into our midweek session. First of all, it's very good to be back. Thank you so much for your engagement for the time that I was gone. And thank you so much, Stephen, for doing an amazing job for the time I was away. And one tip, if I can give you guys, if you're in Australia or the US or many other places, and if you've never been to Indonesia, Bali, go there. Your currency is so strong there. You're literally like a millionaire. And I thought I was like a fairly basic person for going there, but like considering I could get a massage every single day for like 2 hours for less than $20, it was insane. And I have come back so much more relaxed. So do that, but we will get back to the finance aspect of this channel and leave the travel for another channel. Thank you, Steve. Now, the first topic that we have over here is the ISM Manufacturing PMI rating that came in at 55.6. The important thing about it is the expectation was 54. So we massively exceeded expectations, and we've actually also hit a 4-year high on that. Now, we have covered the PMI chart a lot of times on this particular channel, and that particularly going up signals expansion for the American economy. Now, overlay that with my favorite risk asset, which is Bitcoin. You can see in the past, every time that's gone up, Bitcoin's gone up. This has gone up, Bitcoin's gone up in a bit of a delay. Because, when it started ranging up to these levels in the past, Bitcoin took a couple of months before it decided to make its move up. Could that be similarly happening right now, where now we've started to range above the 50, the 55 level, and will Bitcoin follow? Well, in the short term, it is signaling that. So we'll just have to see how that goes. But that is definitely a correlation I am looking forward to play out. But on other aspects, where a lot of the economy around the world is dependent right now, it's oil. And Brent Crude is right now showing us something very interesting. Through these price actions of highs and then lows and then another local high set very recently, what I like to see is when you draw out this Fibonacci level from 120, which is the highs of March this year, down to the lows of June, July this year at $70, you can see the 50% Fibonacci level sits at about $95. And although we wicked above it on the 20th of July week, we actually came back down because the market wanted to respect the 50% level. Generally, when you break above the 50% level, that's when you're like, okay, cool, there might be a trend change happening over here or a certain reversal that is of value and we could be ranging back up. But when the 50% level is respected, that means that, okay, possibly we might not be having that much of upside from here onwards. And that is what the market has shown us for the last 2 weeks. Now, whether that holds or not is very interesting because there is some recent thoughts and talks for media attention that are saying, ooh, a peace deal might be happening again. But look, if you really look on X, this came out about 5 hours ago or so, this news event. Iran slams the door on any peace deal with the US. Not now, not ever. And at the same time, there was a devastating blow to Iran's navy. US and Israeli forces just struck a port near Bandar Abbas. So this is happening. Okay, you look at the Strait of Hormuz tracker. According to this, in the last 24 hours, only 10 ships have passed. So it's not like we're having great throughput or, everything's open over here. So don't just personally buy into that narrative when it's been consistently proven wrong again and again. But what is something of fact, though, is that the US has stepped in to buy Japanese yen. Now, you must have heard this news 2 days ago, and you must have wondered, well, why is the US doing that? And I haven't covered much about the Japanese yen carry trade from an educational perspective, but I thought this would be a perfect news segment for us to cover it now. So, why is the Japanese yen important to the American economy? And when people have used this term known as the yen carry trade, this is what I'm going to show you from a perspective of learning. So, first of all, the Japanese yen has always been a currency with lower interest rates. Sometimes, it's like about a year or two ago, the Japanese yen actually gave us negative interest rates. And what that meant was that you could borrow the yen and actually earn money for borrowing on the yen. That's how crazy it is. So you would take a loan and you would earn interest on that loan, and then you would exchange that to US dollars and then invest it in the American economy. And that could be a choice based on how much risk you want to take. So you could probably just put that in bonds and earn, let's say, 3 to 5% yield over a long time period. Or you could put it in the S&P 500 and take a bigger risk and earn 10% average annual yields for next however many years. And a lot of people did that because they're like, I'm going to make money in the Japanese yen. I'm going to make money in the American stock market or the American bond market, and it's free money for all. Add some leverage to that, and oh my God, you've got yourself a really nice cocktail. But this all started going to a little bit of hell when the the Japanese Treasury decided they want to start increasing interest rates. So they don't want to keep them negative anymore. They actually want to start increasing because they're like, we have too much liquidity, but the value of our currency is not strong enough. People aren't at benefit, and we need to start making some money back on these particular loans. And when they started doing that, that is when things started going to hell. Because now what happens is if you have taken a loan against yen and you have converted it into US dollars, but the strength of the yen has gone up because interest rates have now gone up to positive instead of negatives, then in that case, now if you ever convert that US dollar back to yen to pay back your loan, the yen is now higher. How does that look on the chart? When you see instances when the US dollar loses strength against the Japanese yen in instances like this, that's when the market starts to panic. And even in an instance like this right now. So in that case, when they had borrowed against the Japanese yen to buy US dollar stocks or bonds, when it went down, they start to get worried and they get margin called because they would have to pay back their loans back in yen, and the dollar is not as strong as the yen as it used to be. So when you have that volatility, that's when the yen carry trade starts to break. And that is why you've been seeing recently the American bond market struggle, because all of the Japanese yen investments that have gone into the bond market, well, they are starting to get sold off, which is why you've been seeing the 10-year yield going to very strong highs at 4.75% since Jan 2025. So you're seeing the 10-year yields on the bond market coming to local highs, putting weakness in the bond market of America. And that is concerning. And that is why America is stepping in right now to buy the Japanese yen, to have some liquidity in the Japanese yen, because all this volatility is causing structural issues to the yen carry trade, while at the same time, the US bond market struggles with that as well. But once this step in has occurred, and at the same time, we are seeing the PMI manufacturing index go up as well, we are seeing things like the S&P 500 breakout of this triangular pattern. As I was on holiday, I checked to see this through, and yes, it was a very beautiful breakout, and we are going towards testing this logarithmic resistance over here. Now, I've said this in the past, and I'll say it again. When we were over here, I said in May that if we break above this line and we come back for support, then I do believe we could consistently have a really strong exponential move. But right now, we are still coming towards testing this particular resistance level. So that's very interesting. But yes, it was a nice breakout indeed, which really goes to support our narrative in the past that war is good for the economy. Because it wouldn't help me but wonder that as America has taken its second attacks on Iran, well, the manufacturing needed to make those weapons as well has possibly supported the American economy, especially in the S&P 500 trade as well. So something for you to ponder about how war helps economics. But that's not my concept of warmongering. I won't go much on that today. But interestingly though, the Russell as well you can see over here, has had a definitive breakout above the 3,000 level. Previously, we were making some wicks, or we couldn't like get those candle closes to be above the 3,000 level, except for one. But then we keep ranging down. But after that, right now, definitively on the week, we are above the $3,000 level. If we close it above the $3,000 level, this is going to be very strong indicator for risk assets itself, because a signal that's very relative to this, and we've been covering on this channel, is copper versus gold. And copper versus gold, last time when I was talking about it, broke up above the 200-week SMA. But not only did it break up above it now, it's consistently ranging upwards and it's staying above the 200-week SMA, which is a very strong indicator for risk assets. But before I cover my favorite risk asset, let's say Bitcoin for that particular matter, I even want to go more riskier today and show you a particular aspect such as altcoins itself. Altcoins in the crypto market, they are coming to a decision point. Now, if I remove this green line for a second, you can see over here that altcoins have this particular red line going back all the way from 2017 to 2020, this support line being built and coming up to a decision point for altcoins. If I add in that green line over here, you can see that if we draw a support line from all the way of June 2025, we now have a descending wedge pattern. So if copper versus gold is going higher and signaling more manufacturing strength, if PMI is going higher and Russell is breaking above the $3,000 significant psychological level, then in that case, could we have a strong case for finally the degen altcoin side of things to be moving upwards as well? Possibly. And why is this decision point coming now so close between 3 points of touch, with such as this descending wedge pattern, this particular resistance line from October 2025, and also this multi-year support line coming all the way from 2016 to 2017. Why is it happening all now? It's because everyone's eyes are on the Clarity Act that pretty much has to pass this week for any strength on the crypto market in the short term to midterm. And basically, the SEC Commissioner Pierce just said that the Senate will pass the Clarity Act this week, but it only has 3 days left before the Senate goes for recess for midterm elections. On the other side of things, will crypto market structure legislation become law, such as the Clarity Act? Only 30% chance. So chances are getting slimmer every single day they do not add it to the Senate calendar, while at the same time, a lot of people are looking towards this. So even though this price action is there, I still believe it can break downwards, because you see over here, last time I said Bitcoin was on this basically ascending wedge pattern. And I said, wait, it could go up or it could go down. And sadly, to my demise, it actually just went sideways. But if you look into the bigger spiel of things over here, even Bitcoin, similar to the altcoins chart that I just positioned, is making this descending wedge pattern. And from that bigger pattern, it could break upwards or downwards. So hopefully the size of this particular pattern is so big that it's going to have a bigger impact to actually push a move upwards or downwards. And the thing is, although I want to be hopeful and say that it does break upwards and descending wedge patterns do actually have a bullish narrative, the truth of the matter is this multi-year support line that we've been tracking on the Bitcoin logarithmic chart, well, you can see over here after all these touch points, Bitcoin broke down below it. And I said that if after 1 month we just come back above it, then we could be looking bullish. The problem is we in August could not successfully climb back up to the 72K level and come back above the line. So it's been now, we're nearly trailing about 2 months worth of time below this support line. And that is my concern, that if Bitcoin has broken down of this particular structure and Clarity Act does not pass this week, then no matter the copper versus gold or the Russell aspect of things or the altcoins aspect of things could look a little bit bearish. So keep that in mind, especially for the short term, because when I look at the Bitcoin liquidity heat map, you can see over here, we do have a lot of liquidity to the downside, especially to the 60,000 level. Now, the interesting case for that particular point being is that we could go down, even to, let's say, the high 50s or the mid 50s for that level, for that real sad news, and altcoins could go down for that. But if Clarity Act does not pass, the SEC has said that they will put forward rules that are beneficial for crypto to push their own agenda forward for crypto assets to be in America. The only reason why we prefer the Clarity Act or the SEC pushing through with their own set of rules is because the Clarity Act goes into law. It goes into it because it's gone through the Senate and the House. So therefore, the next president that comes in can't influence decision on the crypto rules because they've already been put into law. Whereas if the SEC puts them through right now and does their own little things around providing clarity for crypto assets, the next president and the next chair of the SEC could just come in and wipe that all off. So that's why we're trying to get it into law as compared to just get the SEC to write their own rules, which could be great for the next 2 years. So keep that in mind that we could have a short-term downside impact and then we could just move upwards from there. But it's all up in the air. But on that particular topic, considering we've talked about all the degen coins and Bitcoin, we should really talk about Ethereum, which is the second best and one of my favorites as well. And Ethereum, while I was away, actually came back into this triangular pattern, broke up above this support line over here, found support, and right now is literally on the verge. I have to say, this is very dramatic of Ethereum, to be honest, but that's what it always does. So it's literally just on it. It's vicked below it, but it's just there. It's just finding its level. And look, the interesting thing is when you look at headlines like this, the largest Italian bank, Intesa San Paolo, has cut its IBIT holdings, basically its Bitcoin holdings, by 94%, while tripling its staked ETH ETF position in Q2. So that is the largest Italian bank telling you that they're rotating from one less riskier asset into a more riskier asset. Is it because they know something we don't about Clarity Act or about the positioning of American economy with the ISM and also the copper versus gold positioning itself for a more risk on rally, considering the Russell is breaking out too? I don't know. But this is definitely the kind of things we be looking from the big players to signal more risk on narratives, especially when liquidity is more flowing in the American economy. On top of that, we've been covering that ETH versus BTC, which is the strength of Ethereum against Bitcoin, has been breaking above this parallel downward channel, and right now, okay, has been going down for the last 2 weeks or so, but has signaled strength for a bit of a longer run. So how that looks like, well, that would be very interesting because at the end of the day, BlackRock, one of the largest institutional money management fund in America, has tokenized a massive share and a money market fund on Ethereum itself in the last week or so. So this is a really big deal because big institutions like this are adopting this particular crypto technology. And all I want to say is while we've been covering ETH's strength and Ethereum's strength against Bitcoin, I'm really glad that a large bank like Intesa San Paolo are watching mine and Steve's video because we have been covering this right away, haven't we, Steve? So it's
Yeah,
good to know
I
how
think they've been seeing that relative strength. Yeah,
yeah,
exactly.
yeah, ETH
They've
relative
been
strength
noticing.
against Bitcoin. Intesa San Paolo, you are welcome for our analysis. Clearly, your analysts are not doing the greatest job. So
No, they are doing the greatest job by noticing the relative strength. So that's exactly it.
So that is what we have on my side of analysis today. But we will pass it over to Steve so we can get his thoughts on how he thinks people are copying our analytics from other big banks and at the same time what he has to share today.
Well, absolutely. And it's great to have you back, mate. But yeah, as that Italian bank, I reckon, have definitely been keeping an eye on your analysis,
Yeah.
mate, because yeah, look, the relative strength aspects have definitely been coming through, and we've been noticing that, and you have been reporting about that as well too, in terms of Ethereum over Bitcoin for quite some time, and we've been looking at that from a technical analysis point of view as well too. So well done. All right. Well, before we jump back into that relative strength aspect in terms of Ethereum over Bitcoin, let's have a look and see what was going on with the state of the markets initially. Now, this has been the chart of everything that's been going on. And like I've been saying in the videos overall, I really have been glad you've been away on holiday because really the state of the markets overall, especially in terms of crypto, have been batshit boring. But in terms of the markets overall, we've really started getting a bit more activity in relation to earnings and a few other areas as well too. And that really has started coming through, especially even in the overnight session in the US markets from tonight, and in terms of the way things have been going, really what's been happening now. And we can really see that, especially with a rebound overnight in terms of the bond market. And you can really see that in particular in terms of a 0.75% jump in the bond market overall last night in terms of Tuesday's session in the US market. So you can see what's been happening there. But the biggest thing you can really notice as well, that has actually corresponded with a dip back in relation to the rates. Because you could really see at the end of the week, the 10-year rates in particular have really, really jumped quite high to phenomenal rates overall. We're actually starting to see them pull back quite substantially. In fact, they've actually come back quite substantially to an area well below now the short-term moving averages. So we actually are actually pulling back quite substantially overall. And it's actually reflecting quite a lot even with the Ichimoku curve when we're taking a look back in relation to the lagging indicator. So even though we are still on higher highs and higher lows, you can really see how much of that whipsawing action is going on with the lagging indicator. So we really do have quite a bit of movement going on, and that's really reflecting itself in terms of the unit prices there too. We are still in an uptrend though, and you can really see that, especially with that Tenkan-sen blue line being above the baseline. So the uptrend in the rates is there. We are still in that higher for longer aspect until the trend is broken. And we're not seeing the trend being broken in relation to that as yet, because especially when you go back to that TLT, we are still in a major downtrend in relation to the bonds. So until that gets broken and until the bonds make their way back above the quarterly VWAP at least, we can't really say that the bonds downtrend is broken at this point. But what's really happened in relation to a lot of the indices at the moment? Well, at the end of the week, as you can recall, we were talking about the SPY and Dow in themselves having a lot more relative strength. Let's see what's going on with them as we go for this week. Well, as you can see, when we take a look at the SPY has really broken out at the beginning of this week. We've had two very strong up days in relation to the SPY, which you can really see in terms of that breakout. And Yash was alluding to that as well too in his presentation just a few moments ago. You can really see as well that we're actually going to be breaking out more than likely in terms of another gap up when the market opens up again in around about half an hour's time. So overall with that, this is going to be continuing for some time. Whether or not we're going to get a gap continuation and keep on going, that remains to be seen. You can really see that we're actually hyperextending away right now from the short-term moving averages and the quarterly VWAP. When we start really gapping away quite considerably, that's where things can get overheated and they can actually get pullbacks. We've seen that time and time again for those who have been with us for quite some time. We saw it with silver, we saw it with gold, we saw it with a whole heap of other things. When things get overextended, they pull back, they come back towards these short-term moving averages. Let's see how things do move on. Now, if we take a look at Dow, because the Dow is actually quite moving along as well overall too, I'll move across to the diamond so you can see that with the quarterly VWAP, and you can actually see how much that's gapping away as well too. So these breakouts and the all-time highs and all of those kind of things there, we're seeing that with a lot of these indices right now as we speak. Okay, how's that translating across to other areas of the market in terms of, say, the Qs and the Russell? Well, in terms of the Qs are starting to actually move quite substantially as well now as well. These are the tech-laden stocks. It's above the quarterly VWAP, also above the 50-day moving average at this point as well. Not gapping up as high as what we're seeing with the SPY and the Dow in relation to things, and we're not reaching all-time highs as yet. You can see that we've actually got a lot of congestion still to break our way through. So we've got less relative strength in relation to the Qs, but still moving along quite nicely. Remember at the end of the week, we were down around about over here, and it was still along the lines of trying to break its way through the short-term moving averages at that point. But it's doing pretty well. But see how things do go, because when it comes to the Qs as well, we just had SpaceX release its earnings overnight. Hasn't been all that fantastic in relation to the actual earnings itself, but that's coming off a 10% rise, or almost 10% rise during the session yesterday. I'm just going to bring up SpaceX as well once I can finally get across to it. That's SpaceX there. SpaceX had a 9.5% rise yesterday, but as you can see, as it closed at $125 at the end of yesterday's session, but that's going to open up just underneath 111 when trading recommences again in half an hour's time. So you can really see that there's quite a lot of movement going on, and overall, the earnings report has not impressed the market overall in relation to things there. Now, if we take a look at the Russell, in terms of the small caps. And actually, we'll go IWM so you can see where that's going to open up as well shortly. IWM, in terms of the Russell itself, has not actually reached all-time highs over the last couple of days, but it looks as though it may actually open up towards those all-time highs in half an hour's time. And actually, it's actually gaining some strength there as well. So overall, in terms of that, that's actually responding to the rates coming down in the short term. Interesting thing to look at as well too, with everything going on, is the Dow Jones Transportation Average. Remember, that's part of the Dow Jones theory as well. So overall, that's actually been dropping in recent times, and you really want to be seeing that actually increasing in strength in order to actually align with the indices. That's the overall concept in terms of Dow theory. We're actually starting to see that bounce back up off that 100-day moving average, which is an interesting aspect there as well to keep an eye on. Speaking of which, let's have a look at the Australian dollar and Japanese yen, which we've been talking about as well. This has actually just bounced off the 200-day moving average, which is a fascinating thing to keep an eye on there. And that could also, when we're thinking about things, explain the reason why we've also seen a recent jump in relation to the indices overall as well too. Remember, we were talking about this on the weekend as well in terms of the relationship between a dropping Australian dollar Japanese yen ratio and overall drops in the markets as well too. When you see the markets dropping overall, the Australian dollar Japanese yen ratio normally drops as well too. As this can rebound, you will generally see that the markets will rebound as well too. We're starting to see that a little here. Keep an eye on this overall as well too, considering the fact that we're actually now potentially testing this yearly VWAP coming up as well too. If we struggle against this yearly VWAP, and we may actually have some further interventions in the yen coming up as well too, are we going to potentially have the market pulling back again? This could also correlate, as Yash was talking about before, in terms of Brent Crude as well. If Brent Crude decides to actually rise again with war tensions and all of those kind of things as well, will that have an effect on the market as well too in terms of a pullback? All of these factors could come into play, especially as we were talking about the indices a few moments ago as well too. Are they going to pull back because they're so hyperextended away from the short-term moving averages? I'll let you decide on that, and I'll let you keep an eye on all of those aspects there too. You might be saying, well, Steve, everything's going along really, really nicely at the moment. Why are you so concerned and why are you so worried and bringing up caution? I'm not worried and bringing up caution. I'm just trying to raise a few aspects here because over the last couple of days, even though whilst everything's been going all nice and hunky-dory, the VIX actually rose yesterday and went up 2.5%. Why is the VIX rising in everything's going along really, really nicely and we had such major rises in the indices overall in the last day or so? Okay, now that just raising all of these aspects here. We had the SPY going up almost 2%. We had the VIX also rising 2.5%. Interesting kind of things there. You wouldn't normally expect the VIX to be rising, even though it's only a small amount and it doesn't look like much on the chart itself. But you wouldn't be expecting the VIX to be rising when the indices are rising such a major amount. That's the kind of thing there too. So maybe some people are actually getting into a bit of an aspect of thinking, well, hang on, maybe I should actually get some put protection going on just in case we do get a pullback. And on top of that as well, as the indices do rise, people may not be thinking about put protection and all of those aspects there too. And when they are thinking about those things as indices rise, generally put protection, buying those kind of options is usually a lot less expensive. And that's when people can actually buy those options there as well too. So that might be the reason why we're starting to see the VIX going up a little here as well too. Okay, let's have a look at Brent Crude while we're talking about aspects of those natures as well. Brent Crude itself has actually dropped beneath those volume profile areas back from 2023. So that's aligning quite well with what Yash was talking about before as well, where Brent Crude has actually been dropping quite substantially. So we've dropped out of that range that we were talking about over the weekend between $100 and $101 and that volume profile area. So let's keep an eye on all of this here as to whether or not this will actually be popping back up into that range overall there as well. USO doesn't look like it's really going to be jumping up anything major overall. We're still above the yearly VWAP here though as well. So just keep an eye on that in terms of the caution there as well. The US dollar still looking like it's in a bit more of a downtrend following that yen intervention, which is an interesting aspect there because we've got lower highs and lower lows coming along there. We are testing this 100-day moving average here at the moment, being that white line, and we still have not got beneath this support area here back from December of last year. So there's quite a lot going on still. It's quite an interesting market overall. Let's have a quick look at gold. Interestingly enough, we were talking about this on the weekend as well as to whether or not this may actually be starting to form some higher highs and higher lows. Sure enough, it looks as though we are actually starting to form a bit of a breakout here. So this is actually quite interesting. The rising short-term moving averages overall as well, we are actually respecting that quarterly VWAP to the upside now. And the lagging indicator has now formed definitive higher highs and higher lows as well too. On top of that as well, you can actually see that Tenkan Sen has now broken up above the baseline here for the Ichimoku curve, and we've actually now broken into the cloud as well. So we've actually now got some really, really confirmed positive signs in relation to gold as well. How are we looking in terms of silver? Silver is actually looking quite positive as well too, but as you can see, gold in itself, higher relative strength compared to silver overall because we still haven't broken above the 50-day moving average in relation to silver. So there's some very, very interesting dynamics going on at play. On top of that as well, if we take a look over here at the lagging indicator hasn't broken through that Tenkan Sen line as well overall here. We go back to gold, it has. So that lagging indicator has broken above the Tenkan Sen. So you can see, just by taking a look at these charts overall side by side, that there are differences between gold and silver. So that's actually showing some more relative strength in relation to gold compared to silver. Yash did cover copper versus gold, and you can really see overall the strength in relation to copper overall now in terms of the charts here, looking side by side, Ichimoku curve on the left-hand side, moving averages on the right-hand side. Both charts are showing a lot of strength overall, lagging indicator, higher highs, higher lows, Tenkan Sen above the baseline in relation to the unit price. It's well above the above the cloud as well. And also, we're tracking along very nicely in relation to both the moving averages and also the quarterly VWAP as well. Now, iron was very, very weak when we looked at it last, and it's remaining quite weak overall, even though we've had a couple of days where it looks as though it's doing nicely. But overall, as you can see with the unit prices, lower highs, lower lows overall, and it hasn't changed anything there. And before we go, I cannot go past having a look over at the cryptos because otherwise Yash will hit me over the back of the head. In terms of things there, we're basically still looking pretty much neutral ground overall, as you can see here. It's attempting to stay above the support line from back over in April 21 in terms of Bitcoin. No definitive aspects going on here whatsoever at this stage. You can still see that the baseline is above the Tenkan Sen over here, so we still have some neutral negative tendencies going on overall in relation to things here. There's no definitive breakout one way or the other. Yash has hit it on the head in terms of everyone's still sitting on their hands waiting for the Clarity Act aspects and all of those kind of things to break through. Let's have a look over at Ethereum. In terms of Ethereum, there's still that relative strength aspect going on. You can see the comparisons overall, even if you're looking at the Ichimoku curve. Why? Well, let's have a look. You've got the Tenkan Sen above the baseline. That is your first clue when you're looking at them side by side in terms of Bitcoin versus Ethereum. Straight away, you can see it. It's as clear as day. You've got that in terms of the relative strength, much more there. On top of that as well, the lagging indicator is above the unit prices as well too. So overall, you've got much more relative strength for Ethereum compared to Bitcoin. The Italian banks should definitely be taking a note of that overall there, mate. So that's a big thing there. The only thing that's really, really dragging things down in terms of the Ethereum aspect here is this 100-day moving average as well, which has been well respected by unit prices as well too. But we do have, as we've been saying for a long time as well too, we do have the respect above this support line from back over in April 2025. So there's a lot of things going on, as well as also the respect above quarterly VWAP there too, and respect above the 50-day moving average. So there's a lot of things that are going into the positive as well as a negative in terms of things there as well. Okay, so yes, still lots of different moving parts. You haven't missed out on much there. But really, as you can see, even from the time that you actually went on holidays to the time of actually being right here now, not much has really changed in terms of the crypto space. But your Ondo did actually reach your 42-cent mark. So that should have actually stocked you out on a couple of your positions. So you're probably very happy with that whilst you were away in Bali.
It did hit my first target, so I was very happy with that.
Yes, very nice. So that's good. But really, crypto space, not much has happened. Everyone's still sitting on their hands waiting for the Clarity Act aspect to come through. So you're on the ball there. But yeah, the Italian banks should be really be listening to you there, mate. But yeah, lots of other dynamics going on at play. But it's really interesting to see that gold and silver are starting to actually make their move again, and the gold has got that extra relative strength that's going on there as well too. But yeah, potentially I've got a feeling people are potentially seeing that again as a safe haven more than anything else as well too. So that could be really interesting, especially with the war and everything like that moving in terms of different stages and everything as well too. So a lot's happening, and I think this rotation of everything that's going on there as well. And we didn't go into the sectors again now, but for anyone who is interested in those sectors as well, taking a look at things, we were covering the consumer discretionary aspect on the weekend. Have a look at that chart for anyone who's actually interested in things too, because interestingly enough, they actually did break up above the 150 and 200-day moving averages as well. I won't worry about showing it now, but for those who are interested, have a look at that with the XLY. That is supportive as well in terms of stronger markets because it's an aggressive sector. And that is really, really fascinating as how well that particular sector overall has actually just gone whoosh from around about a week and a half ago. And it's just incredible how well that has actually gone. So things like that have actually really helped prop the market up as well too, in terms of this breakout that we've actually seen in terms of the SPY as well as the Dow. So those kind of things are actually helping support. But whether or not we're actually going to continue to have this gap continuation breakout and keep on going, or a pullback towards those short-term moving averages, that remains to be seen. But with that, I think I've been rambling on enough. I'm going to pass it back over to you, mate. And we'll go get some rest and then get this all published for everyone.
Thank you so much for that, Steve. Great analysis as always.
Thank you.
I have to agree with you. Like the markets were fairly boring throughout the last couple of weeks, but somehow risk on indicators just keep strengthening from my side regarding the ISM, the PMI, the copper versus gold aspect, and the Russell now having a clear breakout. And if it closes above the $3,000 level week, then some things are going to be very exciting for me to keep playing on, especially with the crypto side of things too. But I hope those things, as well as the Japanese yen carry trade, was fun for you to get a bit of an oversight on today, guys. Thank you so much for coming along with us. If today is a long one, thank you so much for your commitment to this video, but we'll make sure we come back to normal times as I am back now, and it's going to be a bit cleaner over the next couple of weeks. But if you like what you saw today, drop us a like. That goes a long way. If there's anything we can do differently, or if there's anything you'd want us to cover, just put that down in the comments. For today's word, let's go with the yen carry trade. If you are watching the video up till now, put that in the comments. Just goes a long way to let us know who is engaged and watching. And as always, if you are enjoying the journey, subscribe along the way. It really goes a lot for us to have you come along on the journey with us. But with that being said, thank you, Mark, for your ongoing support. Love to see your comments even when I was away. And on that, guys, we will see you on the weekend.
Catch you on the weekend, everyone. Thank you very much indeed. And thank you so much for watching.